Well, good afternoon, everyone, and thank you for continuing to spend some time with us today as we talk about investing in holistic communities. And, we have a different approach. We're kind of nuanced and different here at the collective. We like being different. We believe that we have found a way and to answer an age-old question, and that is, how do you invest in communities that normally have been overlooked but are starving for capital and starving for really good ideas? We've recognized through the collective investment group and through the collective network that there are definitely, as folks from Temple University would say, acres of diamonds in our own backyard. And we want to make sure that we are connecting capital to those acres of diamonds in overlooked and underserved communities throughout the Philadelphia area. We are the collective investment group. In front of you is the team. I serve as chairman of the collective investment group. I am very proud of the dynamic team that we have, they're smart, they're hardworking, they are experienced, they're knowledgeable, and they are determined to make sure that we accomplish the goals of the overall collective of marrying capital to opportunities. So I'm pleased to introduce to you this afternoon the collective investment group team. You have Karine Blanc, Stuart Hean, and Randall Drain. And they're going to give you some of their background information, let you know who they are beyond what I have just told you about them. And we will start with Karine. Karine, we're so glad to have you in Philadelphia. You were able to move from another large city to Philadelphia. You uprooted and came here to take advantage of this super opportunity. And you came to the table with a lot of experience and know-how. Tell the audience who you are and why you wanted to be a part of the collective investment group and the collective.
Sure. Hi, everyone. My name is Karine Blanc. I'm one of the directors of investment for the Collective Investment Group. Currently, I lead the firm's overall underwriting, investment analysis, and strategy. Prior to this, I was working in Newark and another predominantly Black city, and with a lot of real estate potential. And there I saw a lot of the challenges that Black developers were facing in getting their projects off the ground, their lack of support. And when I came across this opportunity to work with the collective, I really had to take it.
Great. Thank you, Karine. And we appreciate your dedication to this effort. Stuart, a lot of people from Philadelphia know you. You've been involved in the real estate development activities in Philadelphia for quite a while. So you bring on the ground knowledge of what has taken place, what has worked and what has not worked. Introduce yourself to the audience today and tell us a little bit more about you.
Sure. Thanks so much, Steve, and great to be here with everyone. My name is Stuart Hean. As Steve mentioned earlier, I sit alongside Karine Blanc as her counterpart in directing the investment strategy here with the Collective Investment Group, with a primary focus on project level due diligence and analysis and relationship management. Prior to working with the collective, on a journey for the better part of the last 10 years, working on a variety of community and economic development initiatives. Most recently with Shift Capital, based primarily in Kensington, and prior to that with Reinvestment Fund. So happy to be here and really enjoying diving into this meaningful content and the mission of the Collective Investment Group.
Great. Thank you very much, Stuart Hean, not Hine, Hean. All right. And next we have Randall Drain. And Randall is actually from Philadelphia. And he spent time away from Philadelphia and always finds a way to come back, but he has roots here and he brings a great degree of real estate investment experience to the table despite his youthful looks. So Randall, introduce yourself to everyone and tell us why you're a part of this and tell us about your company as well.
Okay, try to hit all of those. First of all, thanks for joining. I think this will be, as Stuart said, a great discussion. And to hit on, why I've joined the collective as an advisor, it really comes back to those Philly roots. I think that the collective investment group has a differentiated approach to being to adding to the growth of the city. It can be a real catalyst for, and right at a time when the city is growing, at a kind of mind-bending pace, which I think is great. So as Steve said, it's an easy nudge to get me to come back and do something like this, and also to spend more time in Philadelphia. So I'm really excited about the opportunity. And as Steve was alluding to before, my day job, if you will, is as the president and managing partner of Reeds Bay. We're a lending platform that focuses on the lower and middle markets, lending and providing credit solutions to developers, sponsors, existing owners of property. So bringing that skill set and experience to bear here, working with Karen, Stuart, and Steve to really build out a top-notch investment process.
Great. Thank you, Randall. So everyone, you've now had a chance to meet the team. I forgot to mention that I serve as chairman of the Collective Investment Group, and my job was to help put in place a structure that will allow this talented team to build out an investment process, work on our investment thesis, which you'll hear more about, prove that thesis out, underwrite and comb through the deals that we had at the table, build that our investment process with an institutional base and an institutional approach, and take it from soup to nuts. And we've been able to do that in pretty much record time over the last 12 months. So I'm very proud of the team. They work very hard. And now you're going to get a chance to learn more about our investment process and where we are with things. As you know, we're going to raise $100 million to provide equity capital to the developers, the African-American developers in Philadelphia in this first cohort and those to come. Our first close is going to be 25 to 30 million in an existing fund, which there's a PPM that exists for it, and you'll learn more about that. 17 Asset Management is working closely with us to help us talk to investors, work with investors that are interested in being a part of that fund. So let's dig deep now into how we do what it is we do and give you this under the tent look of the Collective Investment Group's real estate investment process. So to get us started, we'll focus on that topic. And Karen, we'll start with you. How would you say a holistic approach informs our investment thesis at the Collective Investment Group? And this is what's interesting about us, is that not only is the collective interested in deploying capital into deals that the developers have, but we also have a holistic approach. We have a proprietary set of social metrics that were designed by the collective network to make sure that we're doing good and doing well. So how do we merge all of that together, Karen?
Sure. Thanks, Steve. Yeah. So when I think about our investment thesis, it's really that there is an unrecognized value in capitalizing developers who understand the urban markets and communities in which they operate. So to break it down into 4 pillars, it really comes down to Philadelphia, development, Black developers, and impact. So when I think about Philadelphia, it's a major U.S. city, top 5 major U.S. city. In Philadelphia, we've seen the population steadily rise year over year over the last decade. We have really low vacancy rates. Our absorption rates are higher than any other major city in the United States. And that is the case for development. That's the demand case for development, that there's a lack of supply here. And while our pipeline incorporates a lot of different types of real estate, we do predominantly have a lot of multifamily and a lot of mixed use properties in our pipeline, and this market can absorb that. And that's why we keep that as one of the pillars of our thesis. And then when you throw in Black developers, we see that there's a real value in capitalizing Black developers. When we think about why traditional capital hasn't flowed through to a lot of the neighborhoods and the markets that we're evaluating now, it's because with any investment, there's a risk in moving into a market that you don't understand. And that's what I think of when I think about traditional capital and traditional developers. So on the flip side to that, we see a value, a real tangible, quantifiable value in capitalizing developers who do understand these markets.
I think there was that may have been muted. Yeah, I think that
was muted.
Sorry.
I know you guys can read lips, so that's good.
We caught it. Yeah, I agree with what Karen's saying. I think what's interesting too about it, in addition to supporting the supply story, supporting the case for development, and I think Philadelphia is a very dynamic city. Anyone who's been to Philadelphia knows how neighborhood-based it can be, and how many neighborhoods there are, how vibrant they are, how distinct they are. So I think when we've thought about putting together an investment strategy, there's this embedded diversity within the city, not just with regard to property type, which Karen touched on, but also neighborhoods, that really have their own kind of drivers, all of which are moving from our assessment in the right direction because of the overall strength of Philadelphia writ large.
Philadelphia remains a very attractive real estate market for investors and homeowners alike. And it's the transformation over the last several years, last decade or so, has been interesting. And we think that continues to create opportunities for investors, particularly coming through the collective. And so, Stuart, how would you describe the way that we're thinking about impact in our investment strategy? Because that's a critical aspect of the mission of the collective.
Sure, Steve. Yeah, I have to jump in on that. In follow-up to what Karen and Randall just spoke on, I think there's an acknowledgement that there's a sort of systemic macroeconomic issue that sort of led to an inequality in terms of who has the opportunity to participate in the growth of a real estate market like Philadelphia. And there's also an information gap in terms of who is hearing about investment opportunities and how they're positioned to take advantage of them. So and that informs our thesis, certainly about why Philadelphia is investable, and we're getting that information not just from the developers that we work with in Philadelphia, but we're also seeing macro level and acknowledgement that capitalizing Black developers, capitalizing impact development is important and valuable. There's a great opportunity there. There's a great BizNow article that came out yesterday focusing on some of the largest CDFIs, which are commonly acknowledged as the sort of first movers in American history on the impact real estate space, making commitments in the multi-billion-dollar range toward capitalizing Black-led development initiatives. So that's really exciting for us, and as we think about an impact focus and an impact strategy, and also the diversity and the range of opportunities that we're looking at and evaluating in Philadelphia, we're really enthusiastic about what we're seeing. Kind of getting towards back to the history of what impact development has been and what it looks like. I think over in the better part of the last 30 to 40 years since the Community Reinvestment Act was passed, we've often, the royal we have often looked at impact as either affordable housing or creating something that is environmentally sustainable. And what our work with 17 Asset Management and the collective network has shown us and helped us to learn more about is that there's actually a much wider range of what impact can look like and be defined as. So when we're evaluating deals and when we're thinking about how to incorporate impact into our investment strategy, we've been discussing taking a much wider aperture as we are evaluating opportunities to look at things that go above, that include, but go above and beyond affordability and environmental sustainability, including social determinants of health, community engagement in the development process and neighborhood dynamics, the developer's intentionality, whether the project might meet the needs of at-risk populations, what does it create workforce housing, is there wealth creation opportunities for people that live in the communities where developments are taking place, what does the racial diversity in the supply chain of the development project look like? So those are some of the things that we're thinking about when we talk about impact. And again, getting back to what our holistic vision for our impact strategy is and how our thesis informs our strategy. We're very enthusiastic about the range of impact criteria that we've identified and the way that we are actively working to measure and understand the types of impact that we're encountering.
Thank you. So we've heard about our thesis, strategy, and priorities. How do we envision the role of capital, particularly institutional capital, the role that it plays or can play in supporting a holistic, approach to development?
Yeah, I'll jump in there. So, in all the work that we've done so far and all the conversations we've had with potential partners, it's become pretty clear that in order for us to execute this vision of diverse, equitable development, we also need diverse sources of capital in order to bring that mission to life. And I think about private funds, institutional funds, foundations, endowments. All of these parties are an integral part of what we're trying to do. They all have separate missions that tie very well into our own mission. And I also think it's important for us to have capital sources that understand the significance of us being allocators in this space. It's not enough for investors to be interested in impact and developers to be interested in impact. You really need an entity that sits at the nexus between the two. And by having us, TCIG, that's the role we play, we're going to be able to source more deals. So we're going to increase volume for our capital partners and our developers. And then also the fact that we have our own rigorous investment process, underwriting process, and we add capacity, we're going to be able to do better deals. Our deals are going to be more successful, and we're also going to improve the investment experience for everybody involved.
So why hasn't, or maybe it has, but we don't know, why hasn't institutional capital found its way to these types of opportunities before? And what is it that we're doing? You kind of talked about this, Karine, but what else are we doing to make it easier for capital to get to these opportunities? Why us?
Yeah, well, I think it's number one, we have the experience, so we bring this experience to the table, but it's also, we're adding capacity to the process that is really going to, it's really going to help in our execution. And also adding an investment process between the parties, it's going to make things easier as well as more diligent.
Okay.
Yeah, I think Karen's right. I think another piece of it is which she's alluding to is an elevated investor experience. A lot of times institutions have reporting requirements, standards of their own, which just aren't flexible. And I think, and not to say anything about days past or other managers or anything like that, but I think our approach at TCIG is deliver an investment experience that is in fact institutional, while also delivering on, as Stuart was saying earlier, clear impact metrics. And our charge here, in a nutshell, from an investment standpoint, is to really do both: is to deliver a good investment experience and also allow investors to walk away with a clearer picture of how, in fact, their dollars affected the goals, the communities, et cetera, that they've looked to affect. I think that's how we're different, is that we're really taking those, the bull by both of those horns with regard to this. And it's not easy, but I think by being deliberate and intentional and clear about our intentions, we're doing a good job so far and have a good shot of succeeding.
Thanks. That's a good comprehensive answer, and it leads to the next question that's probably on the mind of a lot of potential investors and viewers, and that is, how does the investment process at TCIG drive the firm's investment management decisions? We're not buying individual stocks or individual bonds, publicly traded securities. I mean, what TCIG is doing is investing in the projects of the developers, of the sponsors. How does TCIG go through that process? And you guys were the ones that built it out and are consistently carrying it out. Let's let everyone feel and see what that looks like. A little bit of the sausage making when it comes to getting to a final decision on an investment project. Stuart?
Sure. I'll jump in there and we can team it a bit, certainly, because it's a very collaborative approach to what we built. But I think one of the first important things to acknowledge is that the Collective Investment Group is separate and distinct as a firm from the collective network, although we are within the same umbrella and parent organization. And I think the reason it bears mentioning that distinction is because we need to maintain a level of judiciousness and rigor as we build out our due diligence and underwriting process to a level that meets the needs and goals of institutional capital, and also ensures that we have the right measures and structures in place to drive success for the projects that we're investing in. And we've talked earlier about what success looks like from an impact standpoint. We also are very focused on making sure that these projects are financially successful and financially sustainable. As we think about our process, the character of these projects is huge. So our aperture for impact, we've discussed. We're generally looking to underwrite projects, and we're enthusiastic about underwriting projects that aspire to deliver transformational results from the standpoint of holistic development. We want to be working with developers who are enthusiastic about positively impacting the built environment of the places that they're working in, and driving meaningful financial returns. Leadership team is critical as well. We've had the benefit and the privilege of working to understand the project pipelines of the 7 inaugural members within the collective network, who are all exceedingly experienced sponsors with very strong track records and levels of expertise in the asset classes that they have experience in. And we are reviewing very, very promising and very strong deal flow as a product of the earnest work that was put in on the front end by the collective network to sort of help us with originations. Karine or Randall, did you want to sort of elaborate on any holes I might have missed?
Karine, did you want to hop in?
No, you could go ahead.
Okay. Yeah, I think you covered it well. I think one of the differentiators, as you said, is access to the developers in the collective network. I think also, as we kind of think about moving investments down or through the investment process, those relationships that have been built become important because development is so operationally intensive. Having sponsors / developers that are able to collaborate, share, commiserate, whatever the case may be, resources and such, it increases the likelihood of success for our investments. So I think that's a differentiator, that we've got this kind of pre-selected and I would say like empowered group of developers from which we draw to allocate capital to make investments. I think that's a big shift from another process which maybe it could be anyone that shows up, and not necessarily with the same standards, not necessarily with the same support that we're familiar with in our process. And I think the rest of the comments that Stuart made were spot on. The independent, so that we can have debate, we can really be thorough in terms of our selection, we can be candid without, and that allows us to prioritize the needs of the investors. Because at the end of the day, and we've kind of talked about this throughout this discussion, at the end of the day, if the investors aren't having a good experience, we can't have any impact because there's not capital. So we need to make sure that the capital at the table is having the experience it needs, so that there is ample resources to invest in great projects.
So a couple more questions. You guys are bringing up some interesting comments. One, what does a good investor experience look like or feel like from our perspective / the investor's perspective, really?
I think it's two main things, and then I'll let Karen and Stuart add. But I think one is that the return and risk profile that they experience is consistent with what they signed up for. I think that's key. And then the other is that there's, I would say, a high level of transparency and reporting and operations. Because I think that's, again, required for a lot of institutions, and frankly required for and deserved by individual investors too. Quarterly reports, is it audit, is tax, like, am I getting the documents I need, or do I have to be checking on my manager, to make sure that I'm, not running afoul of a regulation. So I think those are the key things, that the risk and the returns are more or less as described, and that the reporting and that client service piece is at a high level.
Yeah, and I would echo those sentiments. I would say a seamless process is, what I would consider first and foremost the key to delivering a really great investment experience. Just thinking about how many steps there are in the process, from when on both ends, with the investor and with the developers, when we're having interviews with the sponsors and talking through their models and their deals and where they are and that follow-up, as well as with the investors doing an underwriting process together and looking at a deal together and kind of merging the processes. If we can get that to be seamless and to get that to be in a way that is not a burden, it's not adding extra, it's actually just creating more capacity for us all to look at more deals and to all be on the same page. I think that's key for the investment experience. And then to Randall's point, definitely the results, that the results are in line with what everybody signed up for.
So inside a pooled vehicle of the deals that the collective has, what is sort of the target return for investors that we see so far based on the underwriting and understanding of the deals that are at the table?
Yeah, they vary. They vary. If we're talking about a pooled investment, what we would anticipate in a fund scenario, we would say 10 to 12 net. But if we're talking about at the deal level, it really varies. We have projects in our pipeline that are your traditional opportunistic ground up development returns, that could potentially be high teens, low 20s gross. And then we have some projects that are more impact focused, and the mission story there is maybe a little thicker, and maybe the return seeking is a little lower, but that's the kind of diversity we would hope to have, and that's the kind of diversity we have in our pipeline.
And we've got about maybe 10 minutes left. Let's talk a little bit more about the diversity of the projects. Are we all, commercial, multifamily, ground up? What does it look like inside of the mix of projects that we have on the table now?
Sure. Yeah. The majority of the pipeline that we've been evaluating for the better part of 6 to 8 months is primarily focused in the multifamily space. It's more often than not ground up construction, with an opportunistic profile where the majority of projects have secured site control, are able to be built by right, and constructible in short order. There is within that multifamily designation, there are opportunities to deliver condominium units, and sort of doing mixed use profiles. A number of projects we've looked at are employing a ground floor commercial approach with a stick-built residential atop, which seems to be popular and well received in Philadelphia. We are evaluating a few strictly commercial, solely commercial projects. But again, the majority of the focus is on multifamily residential.
Okay. And
I would just add. Sorry, I would just add. I think that's absolutely correct, and a great answer. I would just add that reflects our view on where Philadelphia is now, what the opportunities we're seeing now. I think it's important for those in the audience to understand too that our strategy intentionally has embedded flexibility, so that from a tactical perspective we can move in and out of whether they be submarkets or property types or places in the life cycle of the property, and be opportunistic in a way, because that's in the interest of investors and frankly in the interest of developers as well. So I just want to make sure that what Stuart said is absolutely correct, that that's not all that we plan to do under this strategy. It happens to be what we like right now.
Okay. So then what sort of a holding period, if we're in a pooled vehicle of some type, what can an investor expect in terms of how long we would have that capital at use or being used and then returned back to them? Is it 3 years, 5 years, 7, 10, 15?
Yeah, I would say that the large majority of projects would have some type of exit in the 5 to 7 year range. But again, there's some variation there. Some of it could be less, but I would say that's the average.
Okay, so about 5 to 7 years in a pooled vehicle. And the reason why I keep saying, pooled vehicle, yes, we are raising a fund, the first fund, 25 to 30 million. But there are some opportunities as well that we've looked at that we're doing, outside of the fund. Same investment process. It's just accommodating investors as they have come to the table in different ways and formats. So as we look forward over the next couple of quarters, how do you guys see yourselves spending your time between now and I would say throughout the summer? What's your main emphasis in how you're spending time? And you notice everyone how they smile, because there's a reason behind that smile. Look, they're putting in
Steve,
12 to 14 hours a day, so they've got lots to do, and they are enjoying what they do. But go ahead, Stuart.
exactly. I'm smiling because I know what answer Steve is setting us up for, and I think I know what the audience is eager to hear as well, which is that the answer is absolutely diligence, always doing underwriting, modeling, figuring out where our sponsors are in their entitlement process, where they are in their pre-development process, and then doing the work necessary to understand viability and what execution is going to look like, and then getting to forms of agreement with our sponsors that we're working with to try and get some of these projects off the ground.
So realistically, and a lot of people don't know how much time it takes to really go from the beginning of receiving a package from a sponsor, from a developer, to thoroughly finishing the underwriting and review process. How much time does that take through our process generally?
A long time, Steve.
Well, I'd say it depends.
No, go ahead, Randall.
Depends on the package that Stuart and Karen received.
What do you mean by that?
I think that the higher the quality of the package, meaning the more useful the information from an investment standpoint, and also from educating ourselves, obviously, on the project, the package, the quicker the process can go. And we're amenable to working with developer sponsors that are kind of in all points of their idea generation, as Stuart was saying, their site acquisition, their entitlement process. Will kind of meet folks where they are, but it's hard to give a narrow answer to that question because, in fact, development is a long process. It's complex, and a lot of times developers come to us for financing in different phases of their own process. So I think it's the quality of the information and where the developer is in its own what I'll call pre-development steps.
Yeah, so it's basically from a couple of weeks to a couple of weeks times 3 or 4.
Right.
And that's what we've been kind of experiencing. Yes. So then as we wrap up, talk about where we see our capital fitting in to the developer's capital stack and why. Because we were very intentional about where we wanted to place capital in their stack. But most importantly, they were very clear to us about where they wanted us to focus on putting capital in their capital stack. So let's talk about that and why that is so important and where are we going into their capital stack.
Yeah, I mean, we really wanted to be the equity position in their capital stack. That was, as you alluded to, by far the biggest request. Really, that's, when you just think about historically, the lack of capital, lack of access to capital that Black developers have had, it's no surprise that the equity piece is the request we get the most on. But that's also where we wanted to be. A lot of our developers are using their own equity in their deals, and it limits capacity a little bit. Some of them can only do one project at a time, and we really want to be a capital partner where we can step into the capital stack in the form of equity, and that'll enable them to do more volume and more deals.
So we're that rich uncle, aunt, grandmother, grandfather coming in with that check, and saying, here it is, move forward. And it's, we had discovered that, there were lots of debt vehicles that existed, but we had to create a way to take in investor capital from different sources and deploy it out as equity in the developer's stack. And it took a minute to figure that out, and we're always perfecting that wheel as we continue to move forward. So then just sort of lastly here, about when do we expect to begin to deploy capital? And if you guys want, I'll answer that one.
Go ahead, Steve. You set yourself up so nice.
It must be the tie. I don't know. Yes, we do have some commitments coming in at this point, but we're really driving more commitments to the fund into our process. And so we're hoping to begin, not hoping, we see clearly in the second quarter putting some money to work, and then we continue to increase the pace of putting money to work in the end of the second quarter and the third and the fourth quarter of this year. So, for all of those that are out there that think this is attractive, now is the time to really get, talk brass tacks and monkey business with us to figure out where and how, this fits, again, because we spoke about the fact that these aren't public markets, but we have some advantages in that we have known these developers for quite a while, and we launched with a portfolio of roughly $350 million worth of actionable deals that we have gone through and culled down to a starting point. So capital coming in determines when capital goes out, but we are now ready to begin to deploy capital starting no later than the second quarter of this year. And we might do some things in the first quarter of this year as well. Did you guys want to add anything to that? I know sometimes you all give me a little carte blanche when it comes to that, but at the end of the day, you all are making those final decisions, and we respect those decisions. Good. Then that means I said it the right way.
Absolutely.
All right. Okay. Well, I just wanted to thank you all, number one, for your commitment here, team. We really, really do appreciate it, and all the hard work that you've put in. And in advance, I want to thank you for all the hard work that you're going to put in tomorrow and the next couple of weeks and next couple of years as well. This is a wonderful journey. And we want to thank the audience for giving us the opportunity to give you a chance to see underneath the tent of the Collective Investment Group and a little bit of our investment process. For any prospective capital partners that are in the audience, please feel free to get in touch with us. You can see through the information here that's in the chats and the conferences how to do so. 17 Asset Management is heading up that process for us. And so you can always contact them as well. And we really thank 17 Asset Management for all that they're doing for us and all that they have done to help this come to fruition. We thank all of the capital sources that are already at the table, those that have provided working capital as well as managed capital. We've got some really, really great committed partners in the Knight Foundation and the Kind Foundation. And there are several more that are in here with us today that we're about to ink some deals, some capital with them pretty soon as well. When that happens, we will make those announcements. But we are extraordinarily blessed to be where we are now, and we're looking forward to the future. So thank each and every one of you for all of what you've done to help this dream, this opportunity come true for so many. Stay safe.
Thank you, guys.
Thanks. Bye-bye.
Bye-bye.